Hi, Jared Snider here with Exencial Wealth Advisors, and this is week 2 of our series called Energy Executives, Are You Ready for an Industry Exit? Again, this video series is really meant for energy executives that are contemplating retirement or contemplating a separation package from your company, maybe looking to change companies, or maybe looking to completely move out of the energy industry altogether. So if that's you, this video series is really meant for you. Last week we talked about step 1 of an action plan to help you be ready for that exit. And last week we talked about a net worth or balance sheet statement. If you haven't checked out that video yet, I would encourage you to go back and take a look at that. This week we're talking about the next step in being prepared, being ready, being prepared to take action for that industry exit. And that next step is having a cash flow statement. So a cash flow statement is sort of the logical next progression after building out a net worth statement. As a reminder, a net worth statement shows what you own in your assets, what you owe in your liabilities. And all a cash flow statement is going to do is really just cash flow out the cash flow that's available from your assets or the cash flow that's going out the door from your liabilities. So we're going to have on the screen here for you an example of a cash flow statement. And whenever you're looking at this cash flow statement, you'll see we track assets at the top of the statement and really just focusing on those liquid assets that we talked about on the net worth statement last week. And projecting out over time, over a number of years, what the growth or lack of growth potentially of those assets might look like based on some assumptions. So when you're building out a cash flow statement, one of the things you have to do is bake in some assumptions around those future cash flows. How are your assets growing over time? What sort of returns are markets producing for you on those liquid assets? What type of inflation are you using on the expenses that are associated with those cash flows? So some of those assumptions we'll talk through as we continue our discussion here. But you can see the assets over time, the beginning of the year and at the end of each year on your cash flow report. Next, I recommend organizing all of your cash inflows, so all the sources of cash that you're going to have on a go-forward basis. Are there any wages that are going to be coming in from employment, or are we totally turning wages off? I would account for wages both for yourself and for your spouse. Account for future cash flows like Social Security or any pension income that you're going to be receiving. Any distributions that you might be receiving from a business that you're going to own. Account for all of those cash flows gross of taxes. So before we deduct any taxes, show all of those cash inflows. Next, I would account for your cash outflows. So your living expenses, you can break those out as much as you want to, or you can keep it very simplified. If you know my expenses on a given month are X amount, you can take that, annualize that, and list that out. Or if you want to get very granular, you can break out your expenses and show what those expenses are on an annualized basis. That cash flow report should be organized year by year. So we have our 2020 cash flows, our 2021 cash flows, etc., so that you're able to very clearly see on an annual basis cash coming in, cash going out the door. And so whenever you take your inflows and you subtract out your outflows, those outflows are also going to account for things like taxes, like any savings, any other expenses that you know you're going to have. You want to account for all of those various types of expenses. So all of our cash inflows minus all of our cash outflows gives us a net number. And that net number may be negative. And if that net number is negative, that tells you on an annual basis what your reliance is going to be on your liquid assets to cover the difference between your inflows and your outflows, which is going to be very helpful in the coming weeks as we discuss what your portfolio really needs to look like as you prepare for that energy industry exit. So seeing that net number just shows you relative to your assets, do you have a very high need for income or do you have a relatively muted need for income? And then forecast that out over time. Let's say we have 30, 40, 50-year time horizon to be cash flowing out your future cash flows for your life expectancy or perhaps a joint life expectancy for you and a spouse. This is really helping you to understand more clearly where your cash is going to be coming from whenever you do retire, whenever you do take a separation package, whenever you have exited the energy industry. So hopefully that's a helpful framework for you in thinking about the next step. So we move from sort of that snapshot in time of your assets to really seeing a progression of your assets projected out over multiple years so you can really understand with great detail what your cash flows are going to look like. Because at the end of the day, that cash flow is really just driving all of the things that are important to you. You know, the cash in and of itself isn't necessarily the why. Your family, your career, your recreation, the things that are important to you, the support, all of the activities that are most meaningful to you, those are the things that your cash flows really fuel. And so that cash flow report is just showing you how those things that are most important to you are happening. So hopefully this discussion today has been helpful for you. If you have any questions, concerns, if you need a sounding board on anything we've discussed, please feel free to reach out. My contact information is on the screen there. Thanks and have a great day.